On June 15th, local time, the U.S. Central Bank raised the key interest rate by 75 basis points. At the press conference, Chairman Jerome Powell said the most likely 50 bps or 75 bps at the next meeting. The U.S. CPI for May rose 8.6% year-over-year. This is higher than 8.5% in March and the highest since December 1981. Excluding volatile energy and food, the core CPI rose 6.0% from the same period last year. The U.S. CPI fell slightly to 8.3% in April from 8.5% in March, raising expectations that inflation may have peaked. However, concerns about inflation grow as the CPI rebounded again in May. The U.S. Central Bank, the Federal Reserve, has stressed that it will move expeditiously until it sees concrete evidence that inflation is definitively slowing. Inflation intensity did not subside even after 50 BP increase in May, so it took the giant step for the first time in 28 years since 1994. The U.S. benchmark interest rate has risen from 0.75% to 1.0% per annum to 1.5 to 1.75% per annum. Federal Reserve Chairman Jerome Powell hinted at the possibility of a giant step in July as well. As for the worst inflation in 40 years, the inflation rate is too high, so a continuous rate hike is appropriate. Chairman Jerome Powell agreed at a press conference that he would do anything to curb inflation. It also showed a willingness to continue the process of significantly reducing the size of the balance sheet. The Fed forecasts growth in the fourth quarter of this year and the fourth quarter of next year to be 1.7% lower than the long-term growth rate of 1.8%, and the inflation rate to be 2.2% in the fourth quarter of 2024, higher than the long-term inflation. Even if the economy slows, inflation is expected to exceed the target level even after 2 years. Inflation targeting will become an issue eventually, if not immediately. The FOMC said in a statement that it expects that it will be appropriate to continue raising interest rates and emphasized that it will do its best to bring inflation back to its 2% target. Clearly, today's 75 BP increase is a very large rate hike, so I do not expect a move of this size to become a common measure, he said. The 10-year U.S. Treasury yield turned downward following the remarks of Chairman Powell, who left a clue that it was unusual. The three major indexes of the New York Stock Exchange, which had returned their gains after announcing a 75 BP rate hikes on the same day increased their gains again at this remark by Chairman Powell. In general, financial markets tend to adjust due to concerns about the economic slowdown when a large rate hike was carried out at the FOMC. This time, the stock price rebounded. The Fed has taken a giant step for the first time in 28 years, but predicted that the possibility of tightening at this rate in the future is low. This is also because the stock market had already reflected the possibility of a 75 BP interest rate hikes after the U.S. consumer price announcement in May last week. As the Korean stock market fell sharply the previous day, we believe the U.S. stock market will continue its rebound today, but the overall rebound after the FOMC does not appear to be as large as that of the U.S.